Like today's Positively Sloped, we are back in studio after a little layoff to discuss the end of 2025, the beginning of 2026, the upcoming Super Bowl, and everything that's on tap for the markets and economy. All right, let's talk shop. Today is Tuesday, February 3rd, and after a 6-week hiatus or so, we are back on Positively Sloped. We had to take a little bit of a break. I needed to gallivant and celebrate. What was I celebrating again?
I forget, Jake. I've heard so much about it.
I don't know.
It's just,
wait.
What is
Indiana, I actually brought something for you.
Oh, gosh.
So,
this is not
as we all know, I went to Indiana. I'm now a national champion, and I brought something for you to put on and wear for the show, please.
Please?
To show your fandom. I mean, all year you said Indiana's the best. Indiana's the best. You're better than Ohio
Yeah, that's cool.
Trust me. So now I want to rep your colors.
Well, yeah, I shouldn't have to wear this then. And I don't look good in red, but that's fine. I'll do it for you, Jake.
Make sure your mic's out.
Yeah, what's up? It's up. We got it. It's up. We got it. It's up.
There we go.
It's
you look beautiful.
It's out. I don't feel beautiful, but that's fine.
So Scott, first show of the year.
Jerks.
First show of the year. We got some stuff to recap from the end of last year, and then we got a lot going on right now. So I mean, the markets are hotter, the country's colder. Indiana won a national championship. We got a Super Bowl in 5 days. We got a ton going on with Fed news and the markets and earnings and gold and silver. So
yes,
I mean, I don't know about you, but I'd like to just jump right into it.
Let's do it. And I'll tell you, the funny part is hell has frozen over and heaven is hot, because I'll tell you the things you mentioned. The biggest thing for me that's going on so far, like with the look back too, I think 2025 is like the crazy thing about this was all a 2025 setup. When you just talked about those great highlight points, if you look at 25 and how it kind of finished with the shutdown and things like that, with Indiana just rolling through the playoffs especially, it was like that was the setup for what I think is 26 so far. And we're not surprised so far because I think it's panning out the way we kind of expected it.
Yeah, so 25, just to put a bow on it, if we could.
Bo Jackson.
Another double-digit year for equities. All three major indices up double digits, led by the NASDAQ. But we did see towards the end of the year some weakness, some parity between the NASI and the Dow and some of the other sectors. So I ask you something. Is this the start of a great rotation or just kind of a cool down period for tech to maybe consolidate and gain a little steam and come back better than ever?
Yeah, I think that's it. I think that's the whole joke on everybody is it's this tech kind of fallback, and then the Dow steps up like today, this morning, February 3rd, here we are. We've got a new Dow high, all-time high, and the NASDAQ's kind of been a little bit volatile here and there, and then we've had obviously the small and mids kind of fall off too, where it's like the Dow gets in the headlines, everybody starts thinking, okay, this is the broadening of the base, this is the kind of great rotation, and then all of a sudden you don't look very far in the future, and then the NASDAQ's roaring back, and you've got multiple moves in the double digits for the tech stock. So I think that's the way it's going to stay, just because a lot of the other conditions are the same. Interest rates are pretty much the same. I know there's a new Fed chairman we're going to talk about that's coming in. Earnings momentum is still about the same. Sure. The consumer is about the same, which is pretty good. The government is still the same, kind of flirting with tariffs, but not really doing much. And so there's just a lot of things going on, and geopolitics are still a mess. So there's a lot of things going on that seem like there's kind of some changes happening. But the reality is the backdrop is about the same as it was, and therefore that's why I think the pattern stays the same amidst some volatility that comes out, day to day.
Agreed with you on the volatility. I think also, in my viewpoint of 26 is that tech is going to lead, but I think we're going to see much broader market participation. So we covered this in our 2026 outlook.
Great piece, by the way.
Great piece. 41% of S&P performance last year came from the Mag 7. That's down from about 66%.
Seems low.
Prior. So we're starting to widen out a little bit, and so I think it's just an expansion of the market. But I do think, again, you're still going to be led by AI. These companies that are massively investing in AI and their tech products and suites and softwares, those are still going to be your market leaders. But I do think there's some chance for some beaten down sectors to maybe roar back a little bit. And speaking of roaring back, we got a 3-year fixed income rally right now. Coming off that 22 year where everything sucked. The 60-40 was dead. You were down 15% if you were in a 60-40. There was no safety anywhere, and we had to find something to replace fixed income.
Bitcoin, I guess? I don't know. That's kind of funny.
3 years.
3 years. And it's funny because it goes to show you that bonds are really not a dead asset, I think, is really the takeaway.
Agreed.
But you have to be careful with bonds because, as we know, Jake, and some of the assets that we manage and some of the bond, say, tactical strategies we have, it's not always all bonds all the time. It's not always all treasuries all the time. And it's not always say, hey, interest rates are just going to stay flat and everything's cool, because that would be ideal. I mean, truthfully, if you look at the Fed, if you look at bonds, if you look at just equities vis-a-vis, when bond rates are flat, effectively, when bond rates are stable, that's when you're good to go, because that's the whole calculation that comes in with companies and stocks and prices that allow those kind of things to get worked out and be fairly priced. So we're not there yet, but I think we're maybe getting there. I hope, depending on how we view that new Fed chairman here. I think the market's a little bit torn on it, but more it's too. It's like if you look at how the markets have taken, I think the second half though of 25. I'd almost say that the market has maybe looked at things more as a broadening base, and that's where some of that volatility has come in. The funny part is, as we broaden the base, the volatility has shown up because the leaders before have become more volatile too. And I think that's the thing that we're going to talk about with the leadership of this year. There is probably going to be more leadership, but it's going to be happenstance. It's going to be isolated. So there's going to be times when there's going to be energy leading. There's going to be times when metals, my goodness, have led. There's going to be times when healthcare has started to lead, which is crazy. But then there's going to be times when those things are going to get slaughtered. So you, as an investor, as investors ourselves too, you have to be ready for the volatility to, I think, be ramped up, but also be a give and take situation where you can ride the upside, but just don't take the upside for granted.
I know Kevin Swanson, our COO, and I were working on some year-end pieces, and we were looking at kind of the Callan chart of sectors performance over the year. If you look at 1, 3, 5, 10, 15, tech is at the top of every single portion of that breakdown. It's like, okay, so do you only own tech? No, probably not the right thing to do, but those are the leaders in this market. I mean, it's been a long time that they've been leading, but those are the leaders. They're the most innovative. They're the biggest companies. They have the most robust earnings. They have the best products. They're in our lives every day. You look around this room and there's 100 different screens.
Is that what we have?
That's what it's going to continue to be. So, I think there's some broadening out, and I like fixed income too, to continue this rally as kind of that bounce back off 22. And I think you can be in a 60-40, but I think you do need some modifications. I don't think it's good enough anymore to just be passively in the S&P and the ag. I think, like you said, you got to be in some tactical moving fixed income instruments, and on the equity side, maybe a little more selective on your stocks.
If you get them right, I think if you want to be, you can. But then you just said that with tech, Jake, the tough thing is, as investors, as seasoned folks like ourselves, is even being as experienced as I am, I guess, as you want to call it that, is that it's hard sometimes to stay into those markets too. I mean, you talk about the 1, 5, 10, 15, 11 year. It's like you could just sit in tech and be okay over the course of time, but who does that?
Right.
It's like it's easier said than done. And as an investor, as a human, you get those bad washouts, which could have been last April. It could have been COVID. It could have been the Greek debt crisis. It could have been Brexit. I mean, there's a whole host of things. It could have been my wedding, back in 2007. It could have been my daughter's birth in 2013. Whatever. Like, there's a number of reasons. Your birth recently. Like, there's a bunch of reasons why tech should have been trashed, and it wasn't though overall in the long term. And the key thing, I think, to beat those markets even further that we talk about with our investors, our advisors, our clients, is when the going is getting rough and tough and it looks terrible outside, when it's raining cats and dogs, and it's ad. It's actually, you're getting a cheaper price, just like this shirt that you bought on sale. You want to get a sale price on tech when it goes down. You don't run. You don't sell it at a dump. You don't go to the garbage disposal and throw it in the sink. You actually got to buy more. And vice versa, when it looks frothy and toppy, you don't go out and throw a party. You go hide under your bed. And that's where I think actually some of the data we started to put out for some of our investors, our advisors, and some of the guys and gals that are using our portfolios to show how amazing that is. When if you do that, the counterintuitive idea versus what most people do, which I understand is human, man, is it a different ride.
For sure. So let's turn the attention to this year. We've got earnings for Q4 in full swing right now. Last week we had about half of the Mag 7. If you know how to do math, that's 3.5 or so.
Yeah, so how'd you get half a company?
Yeah,
that's math?
We had four go last
Good math
week.
on the stock market there, buddy.
We had 4 go last week. We're about halfway through the S&P 500. We got Google on tap this week, as well as Amazon. So we're well into this. What are you expecting to see from earnings and earnings resilience in Q4 or for Q4, if you'd rather? And do you think that's more consolidated to tech again, or do you expect to see some broad-based expansion?
For Q4, what did you ask me that
Q4,
for?
Yeah.
I know. What are you looking for, Jake? I think what it is it's great earnings. Now, the market has slowly but steadily come to grips with that. It started to expect more easily double digits numbers, and some earnings, especially in the AI space, like Palantir come out, and some of they're pushing way at the top of the expectations, and then guiding way up too. Yeah. So I think the guidance is something that we start to see with some of the companies out there that have talked about both things being really nicely settled now, but also being really positive in the future. That's good. That guidance is being raised in some cases. Then there's also some companies like we've seen with Microsoft and others that with cloud spend and things like that have been that great. So there's going to be a have and have-nots. But what's lucky is what we talked about with all the volatility in some of the sectors is that the big guys are big enough to keep up or keep the overall, I'd say, index up with everybody else or with everything else because the low guys aren't that low yet. And so I think that does still tell you that we're going to have a great earnings season for the rest of Q4. And I think it means Q1 and Q2, provided we don't have a lot of political stuff come up, because that's part of what happened, I think, somewhat in Q4 with regards to how the market participated in some of the upside, say, trend it had going into the shutdown and things like that. As long as we don't have too much political noise here going into, say, November, which is the midterm elections, which, believe me, you're going to start cooking any minute now. I'm surprised we haven't been smoked with that yet. Maybe some other distractions or something like that. Indiana, the Super Bowl, Seattle Seahawks. It's like, that's my pick. I think there's going to be a little bit more of this, a little bit more of the less, say, gaudy earnings numbers just as we approach those times, because of the fact that I think companies are going to be a little more less sanguine, let's say, than they are right now, because they've got a little pass.
Yeah, I was digging into some of the earnings data that's come out already, some of the projections that are out. We're on tap for the S&P 500 to do 8.2% or so of year-over-year growth.
Yep.
If you strip that out, though, the Mag 7 is expected to grow 20.3%. And then the rest of the S&P 500, right? So the other 493 companies in there, 4.1%. So even the earnings numbers seem extremely concentrated. And we've seen already, like you said, like that point, the haves and the have-nots, which we've kind of been hitting on for a few quarters now, with AI spend. Meta last week, huge earnings report. They had good, top and bottom line revenue beats and growth beats, but what really drove that higher was the AI spend. And so the early returns on that, they reported that there was 3.5% increase on their AI click rate or ad click rate based on their AI spend. So having that 3 quarters or 4 quarters into that $100 billion investment, we're seeing more traffic on their platform and to their websites. And so that's what really drove that higher. Again, like you said, Palantir this morning, massive blowout. It's up 11% or so today.
It's responding, and they're still responding too. Good point about that. The good numbers are coming into where they're still responding. It is good, because remember what happened in Q3 was we started to get some good numbers that were maybe about that 20% range, and then the guidance was decent but not amazing, and the market started to be like, wait, what are we kind of in this for? And I thought that was something that was interesting. That was possibly that sea change that was happening with AI and kind of just that sellout that was happening. But then we had the shutdown, and then just a couple of weird things that happened around kind of the Christmas season and just the way the season actually fell with regards to the holidays and the weird kind of spots in the week that actually cut off some consumer spending numbers and pushed it to January. If you want to do the math on that, that's half plus half equals 1, where you get the 1 result in January, which actually now applies itself to Q1. 1 equals 11, which was actually the day that we saw close to the bottom of the S&P, meaning that washout was probably more from, I think, some of the weakness that we saw in Q3 in the earnings reports, which obviously were just kind of a facade. It was just a window dressing type of thing. I think there was a lot of buyers out there that were still going to come in. They just waited until the beginning of January.
Okay, so enough about tech for right now.
Or numbers, yeah.
What sectors or areas of the market jump out to you as an opportunity this year?
Yeah, I mean, amazingly, I think obviously the ones we talked about, but I still think the ones that are hanging back are the areas you have to look at for some of this bounciness, this kind of levitation, because they just haven't been participating. And it's been amazing how dead healthcare has been. Pharmaceuticals were dead, and let's talk about last year, how dead staples were in an environment that had slow growth, pretty low interest rates, kind of wishy-washy consumer spending, according to the headlines in newspapers.
Our fears of the recession.
Yeah, and our fears and geopolitical issues abound. All kinds of things with regards to like any kind of issues that we had, let's say economic-wise, just went right into the stock market supposedly, or going to, and they never kind of did. So I think those areas that actually held in there okay, they got forgotten, like the staples. Industrials have started to perk up. Defense has done really well this year. And so there's just a lot of areas that nobody's really talking about yet that they're going to notice pretty soon that were just basically left behind completely last year. So those are the areas I'd be most sanguine about, but I'd be willing to trade those, because I still think that long-term trend, as you pointed out with some of the Callan chart information, is really where the market's at and where the action's at. But short-term, I think you're going to have a lot of opportunity and stuff that just was left for dead last year.
I mean, I think healthcare is an interesting opportunity, but I also think the way that index is constituted, when you're investing in healthcare, you're investing in UNH. And they've got, countless problems. Luigi Mangione was just found not guilty of murder or whatever. He's still facing other charges. But then you get the issues that they're going through with Senate. The Senate, they're also, they had earnings last week and down massively, which was kind of expected because they're shutting off a lot of their programs, operations, which is good, right? That's what you do as a company when you're trying to right size, is you kind of have to take that on the chin in the short term to be better long term. But Stock's down 20% after earnings and has not bounced in a week.
It hasn't.
But it's got to bounce, doesn't it? I
It's-
mean, it's been so beaten down. It's the number one healthcare provider on the planet. I mean, it has to bounce eventually.
It does. It depends on what governments do to them as well. I mean, the U.S.
pricing,
government has been tough on them.
Compression.
Yeah, there's been a lot of compression. There's been a lot of talk about kind of organizing the whole kind of benefit structure. And I think the other thing, too, is it is healthcare. And there's a need for healthcare, yes, but healthcare is a tough business. And with all the kind of changes that are going on, like I said, from the government and frankly in care itself, and shortage of doctors and whatnot, I think there's something to be said for the fact that they are going to have to reinvent, which is a good point of yours. But remember, this is a trade type, opportunity type of approach where you're just looking at stuff, and to your question, it was like looking at stuff that just is unfavorably down and stuff that when you invest in things, it's not always buying the next great rocket ship. It's buying the thing that you can pull out of the trash and be like, this thing wasn't in the trash. And those could be different time horizons, but those are things that we've had to explain to some of our investors and our clients that like, this may not be a long-term hold. Sorry, but we still know we want to make money. And that's still the reason that we're here.
Let's talk about a trade that is, on fire. A better part of a year now, but
Indiana?
especially the last week and a half or month and a half.
Bears?
Indiana, we are good for another 5 years, I would say, probably with Signetti. But
Signetti, yes.
Precious metals have been at the forefront of the trading newspaper or bulletin board, if you will, for the better part of the last 6-7 months. But especially the last month, silver was up, 80% year to date in the month of January. Gold is, hit 53.50 or whatever it hit before it came back. But the headline now, as of today, is, the precious metals were wiped out the last few days. I think it's some selling from, silver being up 80%. It's now given back over half of that already in terms of the year to date. But what are you seeing as driving all of this demand? As well as the selling in gold and silver.
Well, again, I'm going to get you to sell me your precious metals at a discount price because, silver and gold are flying today again. So check it out. So gold's up 5% as we tape this. Silver's up 11.
Gold's at what?
Gold's at almost 5,000. Okay. Yeah, and so
silver's at what?
Silver's at 80, 81.
Okay,
so yeah, but also the numbers are crazy though. You mentioned, forget the number of like 5,000, 81, whatever.
Right.
It's like the movement in these metals is crazy.
Insane.
Like these were supposed to be safe havens.
Yep.
And you got silver that goes down 30%. On Friday. And frankly, goes down like 20% on an afternoon when we should have been playing golf. Instead, we're like ice skating together. It was a really beautiful scene. But it's like there's something to be said about all the volatility that's spilling over into stuff that, like, frankly, has not had volatility like this basically ever. Yeah. And the blame has been on the individual investor. It's been on these platforms, these programs that are just trading everything in either a dark pool or some sort of like advantageous way that they're trying to manipulate it. I'm not sure. I hope it's not individual investors because that would be a pretty harsh awakening. I wouldn't think so either. The silver numbers were wild too on Friday with volume. So somebody's messing around in there. I will tell you, what I've seen in the past is that this does not occur in a vacuum and it doesn't just stay in the area that it's in, right? So this will spill over somewhere. It may have spilled over to Bitcoin or have been coming from Bitcoin before. But I'm a little bit concerned at the fact that the reaction so far in other asset classes has been pretty mild. But there should be more volatility somewhere else.
Yeah. It's interesting because we are kind of in a risk-on environment right now, so maybe that is some of the pullback. Things seem a little, better market-wise than they were 2 weeks ago when silver and gold were popping at insane clips. Silver's an interesting one, though, because when we talk about cryptocurrency, like the biggest knock for years has been what's the utility? What's the use case? What's the applicability? Silver right now has a whole different level of use case, and that is basically everything in AI needs silver badly, right? Data centers need silver. EVs need silver. Solar panels need silver because of the conductivity of the metal. So there is generally and genuinely a real asset application to silver that I think is why, to your point about dark pools or whatever, I think this is governments. I don't even think this is just institutional buying of silver. I think this is government stockpiling because data centers and data is the new gold, right? No pun intended with gold, but having that ability to make chips and make them faster and cooler and less negative effect to the environment. Silver's a big piece of that. So I think there's a lot of real buying by governments.
The question is, though, governments, are they buying the ETFs? That's the question I have. Is like, are they not? Why would they be stockpiling the metal?
If they are, that would drive the price up.
It would in theory, but then if you look at the volume, though, in silver, the silver volume on the ETF is high. Yeah. So like, it's weird that would coincide. Maybe somebody's leaking some of the information. You might have just leaked it right there.
Itself.
Right. And so who knows? I think that's not a bad point because it definitely has to relate to maybe some of this AI build out and spend. You look at semis, you look at touchscreens, circuit boards, all the stuff you mentioned. Jet engine bearings too, which we have some new jet engine stuff that's coming out this year that they're going to try to kind of emphasize as part of just a global travel thing. Your teeth, You still put silver in your teeth, so that's great, Jake. And I've been eating a lot of candy.
Cavities.
I don't believe that. We'll check on the dental records.
For like 3 months.
Right, and your dentist had braces, so that must have been an amazing experience too. He was really good at his job. So I just think that's the whole weird rebound. It's like, and now the weird thing is gold kind of pulled silver up along the way, and now copper. The kind of Dr. Copper, the economic investor that is copper, which was tied to basically economic related things to a gold and silver type of approach or like a rebound, is now at highs too. So that's caught up. Platinum and palladium and all those. Yeah. It just is bizarre that the space has gotten so wild and that the price at which it's just increased is nuts. I mean, if you look at any chart of anything in the history of investing, that's an Eiffel Tower chart. That's like an up and away chart that you would not buy into. Truthfully, if you're an investor that wants to make sure your money's okay. And it's very odd to me that, like I said, a couple of these areas, like if you look at gold especially, that was supposed to be a safe haven. Yep. It was a currency hedge, it was an interest rate hedge, it was an economic hedge, it was a stocks hedge. It's none of those things, boys and girls. So be careful when you go into it, because I still like gold. I still like silver, as we always have. We have it in some investments. It's been freaking amazing. But like, I get nervous here at these levels. I just get a little vertigo.
Can we talk about Bitcoin?
No.
I mean, because what I was most surprised about was you had gold and silver popping at record levels because of kind of the instability, the uncertainty, the geopolitical issues, the risk-off environment that we may or may not have been in for all of a week before we said techs are the best again. But Bitcoin has been, beaten down. It's below 80,000. And so I'm wondering, is this a consolidation, or is this a non-real asset class? Like, I would have expected it to at least, kind of to your point about silver and copper, to at least get somewhat dragged up by the gold and silver and precious metal trade. But we are down under 80,000. We talked about it when it was down under 100. We talked about when it was down under 90. Now we're down under 80. Is there more to go down? And it's weird because this is there's a halving cycle in Bitcoin, and typically the year leading up to a halving is really, really strong. We're in that year, so maybe there's some opportunity to buy low here. But what's your take on Bitcoin right now? We know it's the most crazily traded asset out there.
Probably it was, at least. Well, that's the funny thing. So if you look at the volume you look at some of the ETFs that are out there, like IBIT, some of the volume hasn't been that impressive if you think about the pullback. Now, what's happened is, I think that's kind of been worth watching, is like how the volume has dried up a bit as it's kind of settled down here. So not only has gold and silver picked up some of that MOMO, whatever it's been up or down, IBIT's just kind of been sitting around, this 80, like you said, the 80,000 reflective or representative value for Bitcoin, and then it drops down to the lows, and then it bounces, and then all of a sudden we're back at 80, and then it dries up. It's just interesting how that doesn't seem to really move very much as it gets to those certain levels. Like, it's almost like there's folks trying to move the thing, and they either stop or give up, or they go over to gold and silver because there's more action, or people just suddenly don't care, which is strange to me, because I thought this was a whole thing that people were invested in for the long term and wanted this thing to go to $1 million. But in the halving cycle notwithstanding, I still think Bitcoin's good, because it is still something out there that maybe it is the new gold, where it's kind of this one thing where it's like, damn, that thing doesn't really correlate with the NASDAQ, doesn't correlate with the S&P, doesn't correlate with bonds. And so I don't know. What the hell do you have it for? Well, you have it because of that reason. There's 3 reasons, in fact. So I think that's why Bitcoin actually might be building itself a better case here. The problem is, who's going to buy it? And is it going to be taken over by these portfolio managers who have been blown out in gold and silver and had to sell, or whatever they've been doing, selling low and buying high like they're doing maybe today? Or is it because all of a sudden these Bitcoin guys and gals aren't gone? They're just on the sidelines, maybe trading silver and gold instead, and they're going to come back. I'm not sure, but it's a nice thing to have Bitcoin kind of doing its own thing right now, because I'm gloriously happy that it's doing that versus being basically a levered beta NASDAQ position.
Yeah, absolutely. Let's move to your favorite topic, I think.
Bears?
No, not yet.
My mother.
We'll get to them, don't worry.
Okay.
The Fed.
Okay.
Your boy.
Yep.
Soon to be a new boy.
Is he? Okay,
so
good.
We had President Trump on last Friday, come out and announce Kevin Warsh was going to be the new chairman nomination. He's got to pass through, obviously, congressional approval before he's actually put in place in May. Thoughts on the nomination and the appointment from Trump?
I'm sad I didn't get the nomination. I
think you were on the short list.
That's what happened. I had a very short list. I'm very short in general, and I think that's very short of this qualification. I know, compared to you, that's true, and everybody in the room, I guess, in the office.
Right.
I wear pumps. The funny thing to me is he kind of kept Warsh a little bit quiet for a while, and then he came out, his name surfaced, then he started throwing other guys out there, and he was like, no, I'm going to go this route. And so he did a good job of smoke and mirrors, because everybody really didn't think about it at the last minute. I didn't check the open markets or the kind of predictive market. Yeah, that would have been interesting, because you probably could have gotten a pretty good bid. Yeah, you probably could have gotten a nice bid. And if you just took the top 3, as we joke about sometimes with some of these, tournament teams, it's like, man, you can get those and get some long odds, and you can actually make up for a lot of spread. So I think Warsh is getting looked at a little bit strangely, because everybody's like, oh my God, he's in, and he's going to be this right hand of Trump, but he's going to be dovish, and he's been not dovish in the past. He's not cared about, quantitative easing and other kind of liquidity measures. The Fed's done with like repo markets. It's really hard to say. I think it's really hard to say that Warsh is going to be the old Warsh. And also, remember, he's got Fed governors not here too, Jake, but he's got Fed governors who are going to be in his ear. Yeah. One of whom is Jay Powell. Yeah, and so there's all kinds of doves and hawks on that Fed board, wherever you look. I mean, Austin Goolsbee, notwithstanding, all these guys. It's like you have a lot of folks there that are probably going to be in his ear talking to him along with Trump, where I think it's a pressurous situation and one where my opinion would be, and I think most Fed chairmen do this, they don't do anything in that case. So if he sits rates steadily and keeps them level, that's my take, right? That's what I would do. Don't do a damn thing. Get the hell out of the way. Get off the front pages. Leave everybody alone. Pretend like you don't exist for about a year. The markets will be fine, and we won't even worry about November elections. But I don't think he's going to do that as long as I say he is. But he better not raise before the election or lower before the election, because that wouldn't look good. Especially that's been bad in the past as far as what they've done.
Yeah. So the Powell point is interesting because typically when you have a Fed chairman whose term is up, they do typically leave the Fed.
Right.
I think the investigation by Trump and the DOJ into Powell, and just the constant berating of Powell over the last 3 years has probably caused him a little bit of spite and saying, all right, I'm going to stay.
Why not? What else could happen?
His term is not up till 2028,
That's
so
right.
he could hang around for 2 more years. He could stick it in Trump's face. So
yes,
it'll be interesting if Powell stays, because that will definitely maintain some continuity of the leadership, and we'll see how much Warsh is really that mouthpiece that Trump wants. But that's the part, the independent word is interesting, because what happens if they do go independent? The long game for Trump doesn't make a ton of sense because he loses control then.
But does he have control now? I mean, he says he does, and he says he wants control. Right. And who's to know that control is even right? I mean, all deference to President Trump here. I mean, the guy's a good businessman, it seems, and he cares about the economy. I know that, but it's like, is that the right way to go with regards to influencing the Fed so much and having just massive liquidity, massive lower rates, massive home buying, like everything that just reminds me of bubbles in the past that really did not end well. As far as movies I didn't want to see again, and that's the way we're going. So I just think that's the thing about what the Fed, you said, if they're going to be independent, they better stay independent to some degree, because Powell staying there, Jake, I think tells you what they're going to do. Powell stays there, I think they're going to stay independent. Powell jets out of there and goes to Bora Bora. I'll be there with you, Jay, because then we're going to be in big trouble. Because then it's like Fed, it's Fed free for all, and the Fed has basically been emasculated, been destroyed, and now they're just basically a right hand man of the government, of the executive branch, and that's not good for anybody. I'm telling you, long term, it's bad.
No. So on the topic of government and the different branches, we are in the middle of a partial government shutdown. We have a ton of essential workers still working, but there is a partial government shutdown that stems from the Homeland Security funding, more directly related to the ICE killings in Minnesota and Minneapolis. We're supposed to get maybe some resolution today as Congress is voting on a bill for funding that's going to shut that down or end the shutdown, I should say. Last shutdown, we know, was a record length. It ended because we finally got a vote on tax credits. Ended up not going the Democrats' way, so we shut down for 36 days. Nothing came of it. I sort of see the same thing happening here, unfortunately, regardless of the terrible situation that's happening up in Minneapolis with the 2 killings. I mean, I think long story short, for the markets, for our investors, doesn't matter if government's in session, right?
It's just more of these things though just look so stupid and feel dumb. And I think that's part of, like I said earlier, what kind of was made behind a little bit of the malaise and the sentiment and just the feels, if you will, of things last fall, where like November, Thanksgiving, and then in December, besides the NFL kind of playoff race, there was a whole lot going on, I guess the NCAA, but the weather was kind of iffy. I mean, it wasn't bad like it's been in January. So there wasn't a lot going on and people were just like staying indoors. Here's the one thing I'll tell you though. It makes the government look even dumber than they are. And long story longer, really. Long story longer. No, I think it is, because if Johnson's coming out every day and saying, we got a deal, we got the votes, and you don't have them after you went through what you did last year and you blew that away. I mean, it's like you guys even like talking to each other. So that just looks really stupid. And I think that's one thing that could be that whole kind of bugaboo to this market kind of resisting their good earnings numbers and resisting maybe the basing that we built in some of these other sectors and be like, well, the government shut down again and we're screwed up because we're going to kill more American people who seemingly, I guess, are innocent to some degree. We're going to get more protests and riots and things like that. People are going to be against each other more than they are. And oh, by the way, another thing that we haven't mentioned too much is like there's other things going on within the country, economically speaking, and weather-wise, my favorite part of things, that are screwing things up as well, to where we don't need a government shutdown on top of this to further divide the country and curtail consumer spending or government spending like it did before.
The weather sucks. I mean,
it does suck.
I prefer, if I'm gonna have my winters. I get that. I've lived in Chicago my whole life. Give me snow. 0 degrees and wind is terrible.
We've had some snow. We've just been ripped off on a couple big storms. I mean,
our East Coast friends are getting pounded. West Coast has nothing, unfortunately. So there's no West Coast skiing right now.
There's bad. It's terrible. That's very sad.
I'm supposed to be getting positively sloped on the slopes right now.
There's nothing positive about the ski season out west, and that's been going on for years. It seems like. It's getting worse.
A record bad winter right
even
now.
After last year, which is crazy. And I think 2 years before that was really bad, and there might have been a good one in between that. The folks out east who got blessed with snow, I'm jealous as hell, because some of you got more snow than we already got this year total in Chicago in one storm. 2 of you, or a couple of cities I saw, they got 2 storms in a row, which is awesome. School's been basically out for the whole year. And furthermore, they're getting back what they missed over the last few years, like you said. So we just got the cold back. And that's what's kind of funny. If you look at where Chicago's placed, I'm a weather kind of guru. I'll be on actually today. Please turn your stations to 12. I guess maybe it'll be today or tomorrow. Might have been yesterday, today, tomorrow. You can look online and find it. Talking about the cost of these storms, though, and how much these storms are really stacking up, whether it's the wildfires, the storms, the hurricanes, the heavy rains, how their storms are coming up to be really a cost to the economy, because they're going to places where people live the most, or where people are most crowded together, and where there's a lot of economic activity of all weird things. So I don't know if that's like a sign of things to come, as far as like we're all just basically screwed, but there's certainly an effort by the weather to basically step up again and basically tell people who were not respective of it, or were not fearing it, or didn't think about bad things happening weather-wise, it's coming for you, and it's putting an impact to the economy for sure. La Nina was supposed to be another comparative year last year. We didn't get one hurricane to hit the U.S. last year, not one Category 1 and above. I mean, that's insane.
Good for you, finally. Captiva House back up and
it's great, and I'm too busy to even go down there now, so it's totally screwed up now. So thanks for that.
Yeah, let's get to football. Football, sports.
Yes.
I want to start with a topic near and dear to my heart. I mean, we're both repping this amazing gear that I brought today. I saw a very funny list circulating on the internet. This guy basically created like the best hires in civilization history. He had scoring mechanisms. He had rankings based on like longevity, how fast the trajectory was. There were coaches on there, presidents,
Michelangelo?
CEOs. Michelangelo was like 3 or 4.
Absolutely.
You had dictators on there. Genghis Khan was on there. You know who was number 2 on the list?
Number 2 on the list, George Clooney.
Kurt Signetti.
Yeah, okay. One championship.
Okay, listen to the trajectory. Indiana, program that's been around 120 years or whatever.
They
had 3 bowl wins in their entire history before literally January 1st of this year. Then they rattle off the playoff win. They get 3 bowl wins this year. In his second year, he's 28-1.
Yeah, with
a national championship.
Is it
the most unlikely championship maybe ever in sports?
It could be true. I'll give you that. I mean, certainly at the beginning of the year it was. I think it started to become apparent that was going to be possibly something in the cards. I mean, I don't know. One thing funny, I mean, we talk about kind of odds and stuff. I don't know what the rates were on Indiana for the summer. 151. Nice. So that tells you something. But to compare him to Michelangelo and Genghis Khan,
Genghis Khan was hilarious.
I mean,
Steve Jobs was on there.
Yeah, I was going to say Jobs was another guy that would be on there.
Second tenure, I think.
Yeah, I mean, hires depending on FDR. I was going to say FDR was in there too, and I think you've got to have a guy. Maybe even like, I mean, if you think back even in music or trade, I mean, you got to think back. I mean, there's a lot of musicians too that were back there that were conceivably, I think, maybe not hired, but were part of that whole revolution. So I think the thing that you have to think about too with Indiana and football and about even the NFL, Jake, is that you're really starting to see, I think, a lot of these coaches perform amazingly well. And that's really what's exciting to me, is not only is it about the teams this year, when you look at the teams top to bottom, we'll talk about New England and Seattle, but the coaching at the team level is pretty amazing. And I always thought, I mean, we're going to have a coach of the year announced here, I think in about 2 weeks roughly, end of February. And man, I don't see. Yeah, it should be. But then again, dude, I don't see how it can be Johnson. I mean, honestly, like Johnson comes in with the team. Vrabel already played for the team.
Sure.
You know, Johnson came in with a team that basically like didn't know what they were doing. I've got guys that were playing terribly or not playing at all to play really awesome, and like always seemed to have things under control or have like a plan for the game no matter how it was going. I didn't watch a lot of New England Patriots football, but I do know that they didn't play. They didn't play the strongest schedule. And what's funny about New England though is they started getting on fire after like week 3. So Vrabel got into them and basically took them there. So I don't know. It's a close race, but I think one thing that's been exciting about the folks that have come along and that have been so amazing in past history is it's amazing what the value of that can be. You know, like when Steve Jobs comes along, where you have like the leader become the real star of the program.
I mean, think back to like our first or second pod in September.
You're thinking about me.
The Patriots lost week 1 to the Raiders.
Yes, they did.
Who we dogged.
And I think they lost at home, if I'm not mistaken.
Number 1 pick.
Yes.
And now the Patriots in the Super Bowl. So let's do a little Super Bowl kind of breakdown.
Trivia. Okay, good. I like it.
In my the Seahawks have made this incredible run. You've got your former boy Sam Darnold.
Oh, Sam! Oh my God!
Who got Quezzy, the Vikings GM, fired because
and then some. But
Quezzy, Sam Darnold walk. He won 14 games.
I think
now he's in the Super Bowl.
He did. But do you think Sam? Here's a question for you on this. Then why they're blaming Quezzy for this? Would Sam have the same year that he had? And he had a bad end of the year. Here, don't forget. At the end of that year,
it was a bad game to end the year.
He had 2 bad games against the Lions and against the Rams, dude. He looked horrible. And I'll tell you, he looked like the same old Sam that played at the Jets and played at the Titans, and he didn't look like they was worth $10 million.
Hindsight.
Okay, well, 2020 was 2024, whatever. But it's like, come on, dude. Okay, go on.
But anyways, that's a terrible look for the Vikings. Obviously, that's why he got fired. Looking at this Super Bowl, the Seahawks defense is absolutely nasty. Jackson Smith and Jigba, your boy from OSU, one of the best receivers in the league. Darnold was playing on a different level against the Rams. So they look very complete. And then you've got the Patriots, who, like you said, maybe a little bit of a lucky schedule. They played like the second easiest schedule in NFL history.
And then the playoffs.
And then the playoffs. I mean, they're
the Broncos thing. I mean, it's stupid.
Jarrett Stidham, who threw the ball backwards into the end zone, and they won on a field goal. Like, yeah, I mean,
and I think they missed a couple too. Then Lutz missed a couple.
3.
Like, yeah, dude.
So players on your schedule,
right?
So you think it's Seahawks in a blowout?
I think it actually could be. A couple of things about the Seahawks too. Biggest margin of defeat that they put on their opponents of anybody in the NFL this year. I think they had the strongest first half scoring, or strongest first through 3 drive scoring or yards gained. So they come out of the gate really fast. So they get ahead. Nobody's talking about their defense that much. You know, Legion of Boom kind of stole all the shows.
Yeah.
So that's good.
This is the Legion.
Nobody believes in Sam Darnold, and everybody thinks he's going to fall on his face, which that's definitely possible. And I'll keep saying it because I have the Seahawks pretty heavy on this weekend. Lastly, I don't think Kenneth Walker gets enough credit. He's a guy that I always liked. I think coming out of Michigan State, he's fast, he's frisky, he takes the ball whenever it's given to him, and he does free up a lot of those kind of receivers to not only block, as they block very well, but go downfield because everybody's play fakes. They'll do some little jiggy thing out of the backfield where they'll throw the ball back or whatever. They'll trick the defense enough to stay up, and so all of a sudden Kenneth Walker becomes a very big offensive player, part and parcel of what Sam Darnold is doing, which. If Sam has a decent game and Drake May doesn't play the game of his life, I think Seattle's run this 1 by 10.
The interesting thing is to that point about Kenneth Walker, Patriots defense, their run game is where they excel. So it's going to have to be Sam Darnold to beat him. But we'll see. The Seahawks defense doesn't really have a lot of holes. I mean, you could burn him deep. Tariq Woolen almost had that game-costing unnecessary or that penalty.
They're taunting.
The taunting penalty, which was just ridiculous. So the Seahawks, they look only human against the Rams. So we'll see how that plays.
And I think the Rams. I
like the Seahawks too.
Yeah, I think the Rams. That's never in trouble though. I think the Rams actually were the team that could have been the one out of the NFC. And they played well against the Bears. Sorry to bring that up in Chicago. That was a tough game too.
That's all right.
I mean, that's the thing too. We haven't even talked about how the Bears kind of. To me, I thought the Bears missed a pretty amazing opportunity from the standpoint of they played pretty darn well in a pretty darn tough environment at the end of the year with the Packers game being down 21-3 or whatever that was. The Rams game, which was a tough game just because it was cold. It was cold for both teams. The Rams are an LA team. But, I mean, Matt Stafford, I think, is your MVP either way. Agreed. And he had a huge game that game. And he was the Rams are a tough team. So the fact that Seattle did beat them and Seattle kind of, did have some things, I think, in that game that were actually against them that were not really fair. Seattle just, to me, also, though, in that sense, seems like the easy pick. So listen, I think Drake May is really impressive, and I think the Patriots are impressive. Mike Vrabel, coach of the year, most likely, but are just going to be overmatched. So, and the fact that we're betting on the same team is probably a good enough time for you to run home and not change your bet. Yeah.
Let's wrap up with some fades or trades for the week, and then we'll
send
everybody off into next week. So, what do you want to alternate?
Yeah.
First, all right. First fader trade. This is a little bit of a year-long one, so we'll revisit in 51 weeks or so. I know you hate doing these, but it's important because fader trade, the S&P 500 will log a fourth consecutive double-digit year, which would only be the fourth time in S&P 500 history.
Because what? That's 90s, I guess. Is that right, or was that two? Yeah, when it did 4 years in a row.
90s.
But yeah, so 90s. So that was a great time. I was growing up, and you weren't even born. But I would say then we got crushed. Well, sort of. I mean, there was a tech blowout, and then we obviously had the terrorist attacks and the housing crisis. Then we got another bubble. I'm going to trade it. Here's why, real quick. I think this is going to be set up as one of the markets that nobody believes in. We're going to get some volatility early. We're going to have volatility into November elections, but then things are going to kind of work themselves out, unlike they did last year, give or take some stupid political meandering.
Okay, I'm gonna, no surprise here, I'm gonna fade this.
Yeah,
I'm gonna fade that the S&P 5 does another double-digit year. I think I do see the case for another positive year. But like you've been harping on, I completely agree. I think there's a lot of volatility out there right now. I think there will be a lot of volatility.
Where are you going to go, though? I mean, are you going to buy gold?
No, I think you could go up. Why can't you end up the year 8% or so? We're going to see a pullback. It's got to happen at some point. So then I think we rally off that, and we probably end the year positive. But I don't see another double digit.
Yeah, no, it doesn't sound good. I'm not in. That. It sounds like a boring day. Okay, here's one for you, Jake. And this is pretty good. This is a little tougher, maybe. Corporate earnings are going to exceed 8.3% projected growth in Q4 for the year back. So basically, we're getting almost that double digit growth that we kind of expected even last year. Some and got it.
I hate to be the doom and gloom guy, but I'm going to fade that on corporate earnings. Like I said,
that's not doom and gloom, is it? They're going to exceed. You're going to fade. Yeah, fade the idea. Yeah. Okay, I got it.
Like I said earlier, the 8.3% looks good on paper, but you're looking at about 20% expected from the Mag 7, and then everything else kind of growing much more slowly, much more modestly at like 4% or so. So the earnings surprise percentage is down on the 5-year average, and so I think any weakness from a few of the Mag 7 names, which we've already seen last week, I think that hinders that number and makes it a tough mountain to climb.
So you're trading that. Fading it. Okay, doom and gloom. Okay, so I'm trading it because I think that's a pretty easy layup. I mean, I'd tell you what, here's the deal. If it doesn't happen for Q4 because we have the goofy stuff going on, it'll definitely show up in Q2. It'll definitely show up next year as far as this year for the whole, and I'm just going to stand by that.
Okay.
You're up.
Number 3, tech regains its dominance in the first half of the year. Fade or trade?
Barf. I think it's probably going to happen because the fact that nobody's ready to latch on to your UNHs of the world and even some of your Procter & Gamble's and Pepsi's. But I do think that tech stays the dominator until about June, say 28th, which happens to be my birthday. And then I think we start to get a switch into the kind of the trades that go on into the November elections.
Aren't you the most famous person with the birthday on June 28th?
Unfortunately, I am. There's this guy, Elon Musk, that has the June 28th thing going. Mel Brooks has it. John Elway, a couple other folks. One of my best friends has it. But it's basically about me. So what do you say?
I'm going to fade this. I want to cop out and say yes and no, tech will be dominant because I do think that there are, like I said, I can't say enough. I think the leaders of tech are going to be the leaders of the market, but I do think tech as a whole probably is going to be closer to the next 4 sectors than it will be further from. So I like expansion of this performance across the S&P 500, and I think you'll still have the names at the top, like Palantir maybe, like Meta, that are leading, but I don't think it's going to be broad-based.
Wow, okay, well, it's not going to be broad-based. Okay, maybe that gets you out of that consecutive double-digit year.
Yeah.
Okay, how about this? I'm gonna obviously trade it. This is actually right up your alley. I can't believe this made it in here. Bad Bunny's halftime show, whoever the hell he is, will break the record for most viewers. I mean, these guys show up all the time, like Post Malone, all these dudes.
This is an auto trade for me.
Yeah, you love him. Yay.
Bad Bunny. I don't listen to Bad Bunny music, but he is a global megastar.
Okay.
I mean, he's Puerto Rican. The entire territory of Puerto Rico loves him. The U.S.
So
Latino population loves him. Everybody in South America loves him. I think he's good. Everything's in Spanish though, so I don't know if you're going to understand a single word. But Spanish. That's a huge draw. So I think you're going to get more than just the domestic viewership on the Super Bowl this year, or at least leading up to the halftime show, and then they'll cop out afterwards, but you will have record viewership on the halftime show for sure.
So he sings in Spanish, but his name's Bad Bunny.
Yeah.
Is that Spanish? No. Okay, well, that's bad. I guess that's probably true because every year, I mean, no matter how bad the show is, it seems like we get them.
Yeah.
And I like Dre and Snoop the best. And
that was awesome.
That was great. And Prince was one of my favorites too of all time.
That was awesome. Last one.
Yeah, go ahead. You want to do it? Let's do it.
Fade or trade. Bitcoin bounces back over 100,000 by the end of Q1. Tight timeline, about 20%, 25%.
Damn, Q1? Oh, man. I mean, I'll trade it because you know what? It's one of those ones that looks crazy, and we've seen it with gold, and we've seen it with metals, and we've seen it with people jumping into things that were once favorable. So I'm just going to trade it because I think if that will happen if the silver and gold trades settle down. They aren't obviously today, which is a dumb reason to take it, but it just seems like a crazy trade, and I'll do it.
I'm going to trade it as well because I think this is the one thing you don't want to be in the way of on the railroad tracks is you want to be riding with it, not against it. So I think anything's like I said, this is the asset class. This is the asset per se that can do something like 20% in a week.
Yeah.
And so I think you'll get
If the metals
fatigue off the metals, and that'll flow into Bitcoin finally. So.
Yes, and just to tie it up too, if we'll be back to I guess count these and not count them and forget that we ever said them, but back on schedule, I guess.
In the studio next week.
Good being back with you, and you'll get some Seattle stuff. And I wish you were on a separate trade here, but maybe I'll switch mine to New England, and one of us will have to wear some very embarrassing Seattle or New England gear. Sam Darnold jersey.
We can make something off the show. Thanks, everyone. We'll see you next week.